Oil Management is joining us now to discuss their quarterly performance. Mr. Gangwal is here. Mr. Gangwal, talk to us about how the top line growth was for you. If you could also break it up, because autos is seeing a revival, and so is the replacement demand. More and more vehicles are back on the road. How are your OEM supply as well as replacement market and non-OEM actually growing on top line front?
So good afternoon. So you're right. Basically, we have seen a fantastic quarter, I would say, with 30% top line growth, double-digit volume growth. And also at the same time, we have seen sequential margin improvement. We have recorded an all-time high EBITDA of 90 crore for the quarter. So I think a combination of factors have worked in good double-digit volume growth coming equally from B2C and B2B. Our ratio of B2C sales have marginally improved in this quarter from September quarter. But having said that, we are seeing continuously still a slowdown in the rural side of the demand. So if that picks up in the coming quarters, as budget has been indicative, supportive of rural growth, also we have done a lot of extensive work on the rural side in terms of distribution. All those, if that can give us a tailwind in the rural demand, then we can see good pickup in some of the motorcycle sales, agri-related, tractor oil-related sales also. So that's how we are currently looking at the market.
Talk to us about how raw material issues seem to have eased for you. Your margins expanded. What's the outlook? Where would you like the margins to stabilize?
You're right, sir. Basically, crude has come off the highs of the July-August we have seen, and they are stabilized at around $85 per barrel currently. Similarly, Forex INR depreciation also played on our input cost. That also seems to be now in a range. We have seen that we have taken series of price increases to pass on this input cost over the last 2 quarters, 3 quarters. Now we see a stability in the input cost, and hence you see some improvement in the sequential margins. Overall, we still feel that some of the input costs are still quite at a higher level, like additive costs for us. INR continues to remain at the range of 82, plus. If we see this coming off slightly also, then we can see further improvement. Overall, our key raw material base oil has come off the highs. So that's a comforting factor. But at the same time, we have to look at the competition in terms of pricing and the pass on. And we will do we continuously work on the margin management strategy internally, and we'll continue to focus on margin retentions.
Okay, one last word on growth. How's the passenger vehicle part of your business growing, and also the rural breakup, the two-wheeler, tractor, all of that stuff which is used more in rural side? What's the outlook there? Do you expect growth to rebound in coming quarters?
So rural is definitely, we are looking at improvement in the coming quarters. A good monsoon and coupled with the money in the hands of the consumer in the rural side because of the budgetary announcements, we feel that rural demand should improve over the next 1 to 2 quarters. Motorcycle oil is a key consumption in the rural area, so that we are really hoping to bounce back. Passenger cars are doing very good for us. We have grown high double digit in the passenger car oils. So that's an area where we have low market share also. So we are focusing extensively to improve passenger cars. Commercial vehicle tractor oils are also linked to the rural and agri, as you rightly said. So there we also should see continuous growth. Commercial vehicles, diesel engine oils are doing very well. Already the CV cycle we have seen has revived. So linked to that, the commercial vehicle infrastructure push, which is there continuously by the government, that should also lead to continuous demand on the diesel engine oil side in commercial vehicles. So all round we are seeing demand outlook to remain positive over the coming quarters.
All right, Mr. Gangwal, thanks so much for joining us on the show. That was Mr. Manish Gangwal of Gulf Oil. Take a short